If you want to get better as a trader, I promise you're going to want to see this video. In this video, we're going to talk about the importance of journaling your trades. A lot of traders be skipping this part, but I'm going to show you guys in real time why this is so important. Stay tuned for the intro. We're going to talk about it. Let's go.
Yeah, this is where I wanna be. Live my life like a vacation every night. A movie.
You can be whatever you wanna be. You can do whatever you wanna do. All you gotta do is put the work in and sit back and watch your dreams come true. You can be whatever you wanna be. You can do whatever you wanna do. All you gotta do is put the work in and sit back and watch your dreams come true.
Alright y'all, so on this video, I wanted to really hop on the charts and break down the importance of journaling your trades and back testing. Super important because if you want to improve on anything in life, right, you got to be able to track the progress and you got to be able to know what's working and what's not working so that way you can improve on it. For me, when it comes to trading, I have to know why I won or lost my trades, because the way I trade is I trade with narrative. I think in probabilities. I figure out a reason for price to do what it's doing or what it did. So with that being said, that's how I improve. If I know why I'm losing or why I'm winning, then I can make certain tweaks, test out those processes, and you run trading like a business. Once you get that well-oiled machine on automation, you can rinse and repeat every day. And you just keep tweaking little things if you need to. You take little pieces and little ideas from this place and that place, and then you build your own way of trading. That's where the experience comes in. So yeah, if you're looking at the screen right now, this was a loss that I took on Nas yesterday. And this had me tight, but I wasn't mad at the charts. I was mad at myself because there were a few things that I didn't see or may have ignored. So after I took this loss, I sat on the sidelines for the rest of the day and I journaled the trade. You know what I'm saying? I shook off the feeling of the loss and I stayed confident. Today, I was able to catch a winning trade on EU. And the reason that I was able to catch that winning trade is because I did the journaling yesterday on my loss on Nas. So I corrected those mistakes that I made yesterday today, and I caught a banger of a trade that I'm gonna show you guys. So yeah, let's just talk about this loss on Nas yesterday, right? So the loss on Nas, right? This is what I was seeing initially. I was seeing this weekly fair value gap, and I was seeing this downtrend. I saw price have this bullish order block here. We're on a 15-minute chart. Go up, break structure, come back to it, and validate it, right? So we have, at this point, we have higher high, and then we have this come down here, and we have sweeping this swing low here. So I'm like, okay, it swept a swing low. This may be a bearish breaker to continue down into the weekly fair value gap. Obviously, we see that's not what happened. Nas had other plans. It came back up. It started to look like it was going to respect this bearish breaker, and also had a fair value gap. It wicked back down in a profit here, right? And then it turned around. Tough. This was a tough loss to take. But the more and more I look at it, I realize that I was just on the wrong side of the market. We have price come down to this consequent encroachment. I was looking at the fact that it swept this low, not looking at the fact that it swept this low and tapped into consequent encroachment, meaning it has a potential to turn around. Another thing that I missed is look at this candle's wick right here. Let's see if I can zoom in. This candle's wick right here, right? That was an immediate rebound. What we thought could have been a gap right here on this candle, no, price came all the way down, filled it, tapped the top of this, which is a mini order block, and then took off. So I didn't see any of this yesterday. And I'm human, it happens, right? We're gonna make mistakes in the market. So what other reasons that this may have lost? The higher time frame turned indecisive at this point. I don't wanna click out of it because it may click out of this structure right here, but the higher time frame on Nas was turning like a little indecisive. You couldn't really tell if the daily was trying to go up or go down. I was just kind of trying to ride the wave, or ride it out until I got that profit. Consequent encroachment rejection, you see that here, this wick. Nasty rejection. Bullish market structure shift after taking sell side liquidity. Now this is huge because sometimes I'll be trying to look this off, but you can't really look it off. You have to respect the setups, right? The 2022 model, the sweep of sell side liquidity here, these lows, sweep, and then we have a market structure shift, right? I'm thinking this is a break of structure, right? Because I'm just thinking it's a break of structure. But what I didn't pay attention to was how price swept these lows. That's the first step in the 2022 model. It doesn't have to go to the weekly fair value gap. It swept these lows, then it market structure shifted up while it left a gap. Look at this big ass gap, right? This is the 2022 buy model. It swept this low, broke this structure, market structure shift, change in character, whatever y'all want to call it. See, downtrend, then uptrend. That's a market structure shift. Left a gap, and it came back to it. And I'm thinking that it's going to be a breaker when the whole time it was just a 2022 buy model. So also, yeah, sell side liquidity taken, now buy side liquidity turn up top, right? Tough loss. But look, the time of the day also, this was too close to the open. When I took this trade, it was probably like around between 940-ish and 950-ish, like that macro. So that was another reason. Sometimes with Nas, it really at the open, like it takes a little time to make his mind up. So the 950 macro is not always the best to take on Nas. On Forex, yes, because the open doesn't hit it as hard like that. But like the open on indices at 9:30 a.m. Eastern Standard Time really be going crazy. So time of the day, too close to the open. No news drivers. And on a Monday, shaking my head. This is important because if you trade in this type of way, you need to understand that they use the news to push price where they want to take it. They inject volatility into the market on news release day. So we need to be looking at that calendar at the start of every week, so we know when the volume is going to be in the market. That's going to give our trades the energy they need to get to TP, right? So Monday is also a bad day today because if we're talking power of three, accumulation, manipulation, distribution, Monday is usually going to be the start of that accumulation or manipulation, right? So Mondays are not high probability days to trade, especially a Monday with no news. I've won trades on Mondays, but they've all had news. Whenever I trade on Monday and it has no news drivers, my trades, no matter how good the entry setup looks, they automatically become super low probability. So cutting that out my trading plan. If there's no news, I'm not trading. I'm not trading Monday unless it has news. So also a key thing, if we're talking about power of three, the 12 a.m. and the 8:30 a.m. open. Now, what I'm gonna do, we're on a 15-minute chart. I'm gonna bring up the indicator that gives my charts organization. So right now we're just looking at a bunch of candlesticks, right? Now we're gonna be looking at narrative. The green session is the London session, the light blue session is the New York AM session, and the navy blue session is the New York PM session. So let's just see what happened here, right? This dotted line, this red dotted line, I don't know if y'all can see it right here. That is the 12 a.m. New York open. See right here, this red up line, this line here, that's 12 a.m. You see the time at the bottom? That's 12 a.m. That's where it opened at, right? If the day is going to be bullish, like if you're expecting the daily candle to be bullish, your best buy entries are going to come at the 12 a.m. open or below it, right? Because power of three, accumulation, manipulation, distribution. And we see at the 12 a.m. open how this just pushed up, right? And then it pushed down. So at this point, it's back where it started. There wasn't a lot of manipulation below the 12 a.m. open, right? We just had this wick, which tapped in a consequent approachment of this. But remember, we treat wicks as gaps. So this is the halfway point of the wick or gap, whatever you want to call it in this situation. It went below the 12 a.m. open, tapped that, and reversed, right? On top of all the other confluences we already have. And then this is London sessions low right here, right? Let me just draw a line. Because these are the things you got to pay attention to. Like, if you want to be a chart technician, like if you want to really master trading, these are the things that you have to pay attention to. So this purple line, that's London lows here, right? Didn't pay any attention to this yesterday. I don't know why I was not thinking about London lows, but like if it sweeps London lows, it should probably start targeting London high, which is up here. So that was another mistake on my behalf. That's a user error. So yeah, it took London lows first, and then it targeted London highs. That's something Nas is known to do, is run from London sessions lows to the London session highs or vice versa. I don't know why I wasn't thinking about that yesterday, but yeah, this trade had every reason to go higher. Even though the weekly fair value gap was right here, that was more of like the greed, I would say, to think that price would keep giving these sellers that much down into the weekly fair value gap, just completely ignoring everything that's showing me upside potential. That's user error. So that's the importance of journaling your trades, because if I didn't journal my trade, I wouldn't know what happened. Now I can correct these mistakes in the future. And that's huge, because if you want to become a great trader, you have to grow day by day. My motto is 1% better each day. Just do something better today than you did yesterday. Even if you keep making the same silly mistakes, you have to keep correcting those bad habits. You have to keep growing and have to keep improving on those mistakes you're making, and take it a day at a time. Trading is not something you're going to get rich with overnight, so you have to take it a day at a time. And journaling your trades, doing things like this, that's what's going to help you get better. Because now, in today's trade, we're going to pull up EU and you're going to see exactly how I was able to capitalize off of the mistakes that I made yesterday. All right, so this is the trade that I took on EU today. I'm gonna show you guys exactly why I took it. This was a beautiful trade, I'm not gonna lie. This was a beautiful trade. It's an OTE entry. Let's start with the weekly chart, right? So on the weekly chart, I noticed that yesterday we started off bearish, but now we're getting this huge rejection up. So a little bit of manipulation yesterday, as you see. Consequent encroachment of this wick, it went down to that, rejected, went back up. So even though the weekly candle is starting off bearish, right, it has a lot of bullish momentum today, because look at the size of that wick, look what it rejected. Let's go to the daily chart. So also we have this daily volume imbalance, which is fire, because that's why I like trading futures. I love trading forex too, but with futures chart, you can really see all this. I'm not even sure if this was on a forex chart, but look at this volume imbalance. Drawn as a magnet here, is a drawn liquidity for yesterday. I didn't even trade EU yesterday because I was trading odds and took a loss. But look at this. If you were bearish yesterday, this was such a beautiful move, because you get the power of 3, the open here, go up higher into the lower part of the previous day candle. Also an order block here, pow, rejected and pushed down right into the volume imbalance. That was a beautiful, beautiful trade if you traded EU yesterday. I missed it because I was trading odds, but short-term memory. So today, I see that that drawn liquidity has been hit. I see that we have this bullish order block here. We're at like the halfway point of it, which is mean threshold. So I'm thinking about the mistakes that I made yesterday, right? I did not pay attention to the power of 3 yesterday as far as the 8:30 and 12 a.m. open. So I said today, I'm gonna focus on that. I did not pay attention to which liquidity was left on the charts, what was already taken. I didn't pay attention to that either. So I said I'm gonna pay attention to that today. I made sure that it was news. It was news at 8:30 today. I made sure to let that news happen, wait on it, so we have volume for our trades to go to TP. Paid attention to that today. So I just corrected the mistakes that I made on yesterday's trade, and yeah, the weekly had bullish momentum, even though it was a bearish candle. The daily, we see drawn liquidity was hit yesterday. Now it's reacting to that drawn liquidity, the volume imbalance here, pushing up. So we like that. And then now we're gonna go to the 4 hour. So the 4 hour, what it did show me was this swing low right here. So I was focused on this swing low because I was like, if price is gonna be bullish today, it's gonna have to do some type of turtle soup and go down to take out some type of liquidity, right, before it can go up. So that's what I was focused on the 4 hour, was this swing low. I was focused on that, seeing if that got ran. It did here. And now we can go down to the 1 hour so we can see the actual trade execution. So that's that same swing low right there that I just marked on 4 hour, this one here. So we see that got ran with this wick here, right? Let me zoom in. All right, so that swing low got ran. That's sell side liquidity here. That's your sell side liquidity. That got ran, right? And now I'm just looking to see, is price going to give us reasons to go higher, right? But on this trade, I had to be patient. So this is a 15-minute chart. Relative equal lows, swept. So now let's go down to the 5-minute chart so we can see why I actually got this trade. Because you see this big wick rejection after taking sell side liquidity, after hitting a higher time frame drawing liquidity from yesterday. Now let's go to the 5-minute so y'all can see how I executed on this trade. Okay, so today let's go ahead and turn on the narrative. All right, so we see everything that's happening here. We see pretty much nothing happened in London session like that. But the important part is this red dotted line right here. Actually, let me go back to the 15-minute chart real quick so you can see it clear. That red dotted line, see that? That's the 12 a.m. open. Comes across here, right? 12 a.m. open. So, like I said, if you're going to be bullish on the day, your best setups are going to come below the 12 a.m. open, around the 12 a.m. open, below the 8:30 open, or around the 8:30 open, right? These are two things that I didn't pay attention to yesterday. That's just the power of three, right? So again, London low right here, snatched. Whereas like I said, I didn't pay attention to that yesterday. So I'm thinking that we have London highs here, right? And we also have this pre-New York market open high here, right? So now I'm looking at the 5-minute chart, and I'm keeping this. The main thing I'm keeping in mind is the power of three, right? We got the manipulation put down, sweeping London lows, sweeping out the Asia range lows, and sweeping out the 4-hour lows, and tapping into this area over here, right? So when I saw this wick rejection, I was already bullish on the day because we hit the draw liquidity yesterday. So I was thinking like, this may not run to the moon, but it should at least give me some type of bullish reaction. Even if it's like a short-term reaction, it should be enough to give me a good enough scalp to have a good day in the market. So power three, look at the 8:30 open, right in here, right around where I entered my trade at. So yeah, let's go down to the 5-minute. All right, so the other thing was we have the fib from this swing low, and I think you can see it better on probably the 1-minute, but let's just look at this. Let's look at this real quick, the 5-minute chart, right? Let's look at it real quick, right? Because we have the 5-minute chart here. I'm gonna just take you back through the bar replay. So I called in my group today. I said, I'm looking at this area as a potential market structure shift. It swept the lows. Remember yesterday, I forgot about the 2022 model. Well, I didn't forget about it, but I didn't catch it that it was a 2022 model opposite of the trade I was trying to take. So on this side, on today, I caught it. Look, sweep down below those lows, market structure shift up here. So I'm waiting to see if price gonna give me some type of OTE back to this area. There's a small volume imbalance here, right? So went on the 1-minute chart, and I see that price is trending up. See, a lot of people will get FOMO and think they missed the trade, right? But let's pay attention to what happened, right? So, two places you could have put your fib. This is why the fib is subjective. You have right here, right? Where you could have waited for price to come down here to enter. But look what happens. Price never makes it to the equilibrium of that fib usage. So, I tried that, right? And I was like, it's not going to come back down there. But I see another potential area that I can get an OTE entry, that I can use my fib on. Swing low here, swing high was here. Now I'm like, okay, I can enter early at the equilibrium, or I can wait for it to get down into an OTE, maybe tap into the order block. That's the best entry for the risk to reward. This one's a little bit more aggressive, but I use a safe stop loss and put it underneath that 12 a.m. open, because if price is truly bullish and its market structure shifting up, it shouldn't really come back down here again. So yeah, low hanging fruit was here, right? That is 1 to 2 right there. and then we have buy side liquidity here, and then we have final buy side liquidity up there. So that was the final TP. And yeah, I called this trade in a group too. You see it right here. I called it today 8:56, and then there it is 8:55. There it is, the before and after. He smacked. My group definitely ate off of this. They saw the same thing. I called it. We all confirmed it, and yeah, this was a great trade because this is what happened. It came. Look how price comes down, right? At this point, people probably thought they was gonna lose a trade if they got in early like I did, but I knew that the OTE was here, so I knew it was a chance that it can possibly reject off this fair value gap, come back down into this OTE, and then blast off. So that's why I put my stop loss where I put it. Look at it. It's underneath the OTE. See how many confluences I got, right? I got OTE, I got higher time frame drawn liquidity being hit, a reaction happening, I got power of 3, I got 8:30 candle, I got news drivers, I got 12 a.m. candle, I got confluences on confluences. So a lot of people will say, oh, you got a lot of confluences, you confusing people. That's what they used to say about ICT. Like, he got too many confluences, confusing people, whatnot. But like, this is precision at its finest. This is precision, and this is how you get it. So yeah, look at this. Wow, look how perfectly it tapped into the OTE, right? And how, let me just tell you another pro tip. I talked to my group about this in the class, but how do you know you have your fib correct? Look at the 50% mark and look how many times it hits it. Look at that. That's not by accident. That's algorithmic price action. But yeah, price left this fair value gap here. I think I actually added more positions when it did that, when I got that wick rejection. And then, yeah, the rest was history. This was a beautiful, beautiful trade. TP smack. Y'all can see I actually took the trade right here. Oh, it's blocking it. All right, so you can see the orders filled here. Let me see if I can move this real quick. Yeah, you can see the orders filled here. 3 orders, or 3 contracts, and then a final close for TP right there. The account summary for the day, right there. $1,225.53. But yeah, that's the importance of journaling. That's why you want to really look at what's happening in the market on a day-to-day basis, so that way you can improve your trading. Because as you see, I was able to capitalize off of the mistakes that I made yesterday. So losses, you have to use them as lessons. That's the only way you're going to get better. Know why you're losing so you can improve on it. Y'all just see me do it. Yesterday took a loss on NAS. Today took a fire trade on EU. 8 with the group. Celebrated today was a good day, but we're going to have short-term memory because we got to show up and do the same thing again tomorrow. That's all I got for this video. Till the next one, out.